Channel today, everybody. I am very excited to have you here and cannot wait to get into today's topic. So let me just go a little bit back. Right, here we go. Now, there's a specific stress that every business owner knows. That cold drop when you realize that you've missed a SARS deadline or you didn't even know that one was coming. Now, SARS doesn't run on your calendar, it runs on its own calendar. And today I'm going to walk you through every deadline that matters so that you can plan around them instead of panicking. Welcome to the HM Accounting YouTube channel where we make South African tax make sense, no jargon, no panic. And by the end, you will have a mental map of your whole tax year. If a compliance calendar would help, then stick around to the end. I actually did a whole compliance calendar for my clients as a value-added resource, and just because I was feeling super generous, I also gave this out to our email subscribers. So do make sure that you subscribe to us on our website. I will share the link for you to subscribe so that you can get all of these valuable resources every time I feel generous, right? And I think that a compliance calendar is definitely something that's going to make all of our business owners' lives so much easier. Now, the good news is that SARS deadlines are entirely predictable. Once you know the cycle, you can plan around it rather than scramble. The stress is not the deadlines themselves. It is managing them reactively without assistance. So 3 things to hold on to. One is the hidden cost. This is your penalties and interest that hit immediately. The second thing is that it is predictable. And then the fix is a system, it's not heroics. So do note that the 5-year record retention rule, because we are going to come back to it at the end, right? So the first thing is the EMP501. This is your monthly non-negotiable. If you have even one employee, then this applies. Every month by the 7th, you will submit your EMP201 and then pay over your PAYE, your UIF, and your SDR. Now, the key detail that people get wrong is that if the 7th is a weekend or a public holiday, then that deadline moves earlier to the last business day before, not after. So, for example, if Sunday is the 7th, your last business day is going to be the 5th. That is the latest that you can submit it. Miss it even by a day and you're going to get penalties and interest, right? The other thing to note is that if you are doing an EFT payment, it takes time and it can take up to 72 hours to reflect on the SARS system. So if you are doing an EFT payment, you need to make sure that you make that payment even earlier to SARS. If you are just releasing the payment from your bank account, then you can leave it until the 7th or the 5th or whichever is the last business working day before the deadline. Now, the bigger picture in this is that the money you deduct from staff salaries must reach SARS on time or their tax records don't reflect correctly. So you are affecting your team, not just yourself, right? My advice is to treat EMP201s like rent. Same commitment, same time every month. The next is the EMP501. This is the twice a year reconciliation, which on top of the monthly EMP201, there is a reconciliation that is done twice a year, right? This is a checkpoint where you're going to reconcile your PAYE, your UIF, and your SDL paid against SARS records and against your salary calculations. Now, the 2 windows, there is an interim period, which is around September and October, and it covers the period from the 1st of March to the end of August, right? So the first half of the financial year. And then we have an annual reconciliation, which opens around April to May and covers the full tax year, which is your tax year most companies run from March to February. So SARS announces these exact dates every year. Now, why it matters more than people think is that errors flow straight into your employees' personal tax returns. So if your reconciliation is incorrect or it's off or whatever the case is, then staff actually get flagged on their income tax returns and everyone's caught in the back and forth with SARS. So accurate payroll records all year makes this painless. Then we have provisional tax, the one that catches owners mostly off guard, right? It's not complicated, but it asks you to estimate income before you know it. So if your income isn't fully taxed through PAYE, and as a business owner, it usually isn't, then you register as a provisional taxpayer and you make advance payments, what I would call prepayments towards these taxes. There are two compulsory payments. The first one is due at the end of August based on your estimated taxable income. So you're 6 months in, so you have a reasonable read, right? And the second one is due on the last business day of February. That is the big one, and the estimate must be closer or much closer to the actual. And underestimating here is where penalties and interest really bite. There's also a voluntary third top-up payment if you realize that you're underpaid. Now, the biggest mistake that I see business owners make here is treating this as a once-a-year scramble. Do review your financial records quarterly so that it's really a shock as to what taxes you have to make. The other thing with provisional taxes is that it's really very valuable in paying this provisional tax if you need to, estimating, and if there's taxes to pay the half portion of it, because it really helps at the end of the tax year to make sure that you don't get hit with a big SARS tax bill and then interest and penalties on top of that for underpayment of your provisional tax. So really important to make sure that you estimate correctly, your records are up to date so that you can make these provisional tax estimates. Then we have our VAT 201s. And this is just the cycle that keeps on cycling. If you are VAT registered, you will submit on a cycle set by your turnover and your VAT category, which usually is monthly or every 2 months. Some companies, however, do submit biannually and then annually, so twice a year. But majority of companies, depending on their turnover, and the VAT cycle will be submitting either monthly or they will be submitting every 2 months. Now, returns and payments are generally due by the 25th of the month after your VAT period, with a slightly later deadline if you do it via e-filing and you do a payment release, right? VAT feels manageable until your bookkeeping slips. Now, the usual culprits are things like missing supplier invoices, claiming input VAT without a valid tax invoice, or losing track of which period that you are in. Now, the fix does take discipline. You need to keep your books current throughout the period. Update after the month, right? And make sure that you have all your correct supplier invoices there attached and that it is a VAT invoice, a tax invoice. So make sure that it has the correct details on it, even if you have to have a checklist of what details are needed for the supplier invoices to be VAT acknowledged, then do have that checklist. SARS has a checklist, you can download it off their website. So make sure that you have those records in order, you do your transactions monthly so that you're aware. And then it even helps you to sort of get an understanding of how much VAT is payable, right? Do not reconstruct 3 months the night before of that deadline. There is a difference between a 5-minute submission and a stressful all-nighter. And then we have our income tax returns. Now, this is our annual picture, we must say. Every company and closed corporation will file an annual income tax return. There is no exemptions with this. Unlike personal tax, when it's a fixed filing season, the income tax deadline is tied to your financial year end with companies, due within 12 months of that date. Most companies, it will be a February year end, but you've got to file it every single year within 1 year, right? It pulls together your annual financial statements, your supporting schedules, and your tax calculations. It's only ever as clean as the records underneath it. Now, businesses that keep accurate financials all year file faster, they pick up more legitimate deductions, and they get fewer SARS queries. Wait until the final weeks and you've cut off any real tax planning. The year is closed and there's nothing left to optimize. So do not leave this until the last minute. Do not find your accountant at the last minute. Do it in advance. Get in touch with an accountant who will prepare the financial statements and ensure that it's submitted in time. The other thing to note here is what people often miss is whether your company is dormant or not dormant, whether you are trading or not trading. Once you open up a company, you are liable to start submitting company tax returns from the 12-month period after, right? So even if that company is dormant, you need to do that. You also need to ensure that you've done your registered representative registration, and which is another thing that a lot of people miss. They assume once they've registered their company and they've gotten a tax number, then that's it. They're registered for tax. But no, you've got to register a representative, make sure you have a working SARS e-filing profile where you can make these submissions and get your tax clearance certificates, right? Then we also have dividend withholding tax. Now, it can be a bit sneaky, right? Because if your company declares dividends, there's a withholding tax that's easy to forget. It generally must be paid to SARS by the end of the month following the month that the dividend was paid. It's small in volume. You won't deal with it often, which is exactly why it slips through the cracks. The trick is to build it into your process from the start so that it is never a surprise, right? Not a lot of companies declare dividends, especially if you're a smaller company. But as companies grow and there's more retained earnings to distribute, you do declare dividends to your shareholders if need be, or if that's what the company intends on doing via their planning. So do make sure that this dividend withholding tax is also paid over. And that is why I said that you need to stick around to the end, because I would love for you to screenshot this. It gives you an idea of when your tax payments are due, what tax payments they are. So go ahead, take a screenshot, right? So your EMP201s monthly by the 7th, unless the 7th is a weekend, falls on a weekend, then you will do it on the last business day of that week. Your VAT, monthly, bi-monthly, submitted by the 25th to be safe. Your first provisional tax, 31st of August, right? Your second provisional tax is the last business day of February. I always say to my clients, never ever leave things to the last minute. We don't do that with my clients. We don't submit on the last day because, in case there's a system failure or whatever, which these things happen. So we always submit in advance. The 25th is a safe date when it comes to things like provisional taxes as well as VAT, right? And then we have our EMP501s. We have 2 submissions, a biannual and an annual submission. The interim or the biannual is open between September to October, submitted on the salaries from March to August of that year. The EMP501 annual reconciliation is for your whole financial year, and it is submitted between April and May, right? Then you have your company income tax returns. It is within 12 months of financial year end for your company. And again, like I said, make sure that the registered representative is done. You have a valid working e-filing profile that you can access. And even if you are a dormant company, you still need to submit a company tax return. Else you will incur interest and penalties. Last but not least, the sneaky link, which is dividends withholding tax. It is the end of the month following that dividend payment. Now, one thread that runs through everything that we've covered is records. Every obligation is easier when your paperwork is in order. Your invoices, your bank statements, your payroll records, your contracts, your tax certificates. SARS requires you to keep all of it, and I would recommend for a minimum of 5 years. SARS can open any year they want to now. So there's no fixed timeline on that. So the longer you keep records for, the better. But I mean, it is difficult to keep records endlessly, right? This isn't just a box to tick, because good records mean faster submissions, cleaner reconciliations, and a much calmer response if SARS ever does come back with a query or an audit, which you are bound to get at some point. Another thing that I want to say with records is that it's really important, okay? Look, compliance is not something to take for granted. It affects your tenders, it affects getting certain supplier agreements or certain customer relationships. They ask for tax clearance certificates, they ask for BEE certificates, and you don't want to have left your compliance for such a long time that there's so much of catch up to do, so much of accounting expenses all at once, penalties on top of that, when you could have just done it from the beginning. And as much as this is, what can I say, compulsory, right, or enforced by SARS to have these things submitted, it is a great way to also make sure that you know what is going on in your company, that your records are up to date, and that you're utilizing those records, that you actually are reading those numbers, whether it's the payroll numbers, whether it's your income statements, and knowing what is coming in and what is going out of your bank accounts. So use this as an opportunity to get to know your business, to get to know the numbers in your business. Now, the truth about all of this is that none of these deadlines are surprises. They come the same time or almost the same time every single year. The stress comes from managing them reactively and without a system. Owners who handle SARS without drama do the same things. They do the monthly payroll process, their quarterly financial reviews, and someone watches the calendar for them. So if you would rather spend your energy running your business as opposed to chasing SARS, that is literally what we do. EMP201s, EMP501s, VAT, provisional tax, income tax returns, financials. These are all the things that we actually love to do and take away the stress from you. So reach out to us. info@hmaccounting.online, the best way to get in touch, or visit our website or send us a WhatsApp message. Do subscribe so that you get all of these great extra freebies and resources, and drop a comment with the deadline that always sneaks up on you as a business owner. Stay compliant, stay calm. Don't forget to utilize this as an opportunity to get familiar with the numbers in your business. Until next time, take care and goodbye. Let me know what you would like to see from me next. I would love to bring you more information, more resources that helps you to better understand your business and hopefully helps your business to flourish, because we really need more of those businesses. I'm not only looking to do tax topics, so let's talk about business a little bit. Tell me what topics you'd like to hear about, and do look out for our digital resources. We have a whole lot of cool resources coming up, and I look forward to sharing them with you. Until next time, bye.